In this video, we're going to talk about how we can use the market close to predict or trying to predict the higher probability setups, because the general consensus is that the trader should not be trading like an hour or 2 hours before the close. And that is a good rule. I recommend traders not to be trading like the 2 hours before the close, at least, because a lot of traders are just trying to get rid of these orders. Volatility is slowing down tremendously, and traders just want to get rid of all their contracts because they don't want to hold the market overnight and hope that market's going to go in their favor, because it may go in the opposite direction. But just because the market closed, that doesn't mean that we cannot use this piece of information to our advantage. So here you can see the vertical line. For those of you guys who are not familiar with this NinjaTrader software, you use something else. This is the vertical line that separates the trading session. This is the today's trading session. This was the yesterday's trading session. This was the market close. You guys can see that the market close can serve for us trying to find the key level. And you guys can see it came into play with this nice bounce. And I normally don't talk about this, and I completely forgot to mention this. So I decided to make a video about how important it is to pay attention to market closes, because they can serve as a key levels that will, try to give you the higher probability setups. And it's not important why it works. We don't care why it works like this. We are price action day traders. We don't care about the fundamentals. We just are technical analysis traders, and we just are interested that it works. So as long as it works, that is fine with us. But you don't have to eyeball the market close and the key levels just using your eye. There's actually an indicator that you can plot. It is called, I forgot what it's called. It's like current high or low. Let me find this one more time. There it is, current day high and low, and you can apply it, and the close would be, actually you can see that the bar close slightly here. I had a slightly higher, but that a few ticks, it's not important. You can see this yellow line or this orange-ish line. This is what signifies the market close. And if this seems a little bit too cluttered, because this indicator shows you the highs of the day and the lows of the day and the market open. But if you just want to use the close for the day, because that is the most important, you don't need to know what is the high of the day. This is pretty visible, even though you can see it may come handy if you get the really volatile market. Having the high of the day may come helpful, so you don't go long into the high of the day sometimes, because that can be a little bit tricky. But you can easily just hide. Just click on the current day open, high and low, and you can just show low and show high, tick it back to hide it, and you can just have this piece of information for you. So we're going to go back. I'm going to try to show you guys how exactly we can benefit from paying attention to the market close, because I personally don't use this indicator because I want to force myself to draw it and to find it myself, so I'm really immersed in trading. But for some of you, you don't really want to waste the time, so you can easily use this. And this is very good for beginners to know that you have your key level drawn correctly. You can see how the key level is reacting, how the market close keeps showing you its validity and how important it is. You get into this trading range, and all of a sudden all these longs, they're very justifiable. And once again, we broke below this support and instantly continue working up higher. There's another example, previous day, how the close of the day keeps reacting, and we have a fail break above this. Prices are turning down here, fail break above this. So you can, you don't want to take trades blindly. Please don't take it the wrong way. Don't just go out there and start, plotting the close and just trading blindly. You can, but it is a very important and it is a very useful tool to help you to predict the high probability setups when you're already trying to read the price action. The same thing right here. We have a little bit break higher. We came back, retested the close of the day, instantly turned down lower, came back again, instantly turned down, and now we have a breakout pullback pattern. And here is another perfect area. If you are unsure whether you got your support drawn, your key level drawn correctly, this is how you can identify that there is some key level. A lot of traders are going to be looking at the close of the day, and they're going to be buying the market. And once again, the previous day. So you can see that this indicator can become very useful. The close of the day happened right here. The orange line keeps showing you what the key level is going to be and how you can find the high probability setups here. You can combine it with the rules that we are trying to follow, but it is just a helpful tool to help you predict the high probability setups. But the market today started with a sell-off. We have a break and a new low. We have a pullback at the EMA and another attempt to retest the new low, and prices spiked through the EMA, two-legged move up, and prices are continuing working up higher. So according to our rules, we are expecting two-legged pullbacks at the trend line, but this is very early pre-market open, and unfortunately we just get a first entry here. But we are expecting with the break to have a new high, and this is what it's called, a pyramid pattern. You guys can see that this is in shape of a pyramid. So the first thing you would expect with the break of this channel is you would be expecting some sort of support at the EMA and possible retest. But here the support were nowhere to be found. The prices just rallied up lower. And you have a first entry long at this bar. But we are now deep below EMA, and this is starting to look like a lot of sellers are jumping into the market. You have a pullback and you have a second entry long right here. So even though this is a two-legged move, second entry long, and we are waiting for a new high, we're deeply below in EMA, and we are, this leg down was fairly strong. So you don't want to go long this below EMA after such a strong move down. It still would have worked for scalp. This is why we scalp, but it's not really the point. We want to follow and find the highest probability setups. And you have a first entry short, pullback, second entry short right here. But at the same time, this is a little bit of a dilemma because trader is expecting a new high of this uptrend working up higher. But right now we are in an, sort of consolidating market, and this second entry short set up the trend line. You have a lower high here, but it is still way too early to go short in my opinion, because the strong move up looked very strong. But you have a new high right here. You have a first entry long, pullback, second entry long right here. So this is a first good trade, because at this point on, the bulls, the buyers, they're clearly abandoned their initial idea to continue buying, and the sellers are now overwhelmingly the majority in the market. And this trend line, it nicely confirmed the trend line, because you can find the trend line of these first two swings. This is how you normally find the trend line. And the second entry long, beautiful trap, beautiful bearish reversal bar. We confirmed the trend line. We're below EMA, and it is a failed second entry long. We are not looking for second entry long now, because we're in a downtrend. We're looking for people who are trying to pick bottoms and who are going too long way too late. So this was the first high probability setup according to our rules. And prices continue working lower. You have first entry short, second entry short, but the second entry short triggered below this bearish bar, which we cannot go short below because we are looking to sell. So we need as bearish bars as possible. But this bar, this was a really good trap, because you have a little bit of break and a new high of the very short-term trend line. The EMA is holding prices once again. This is why we plot the EMA. The trend line is holding once again. So once again, similar pattern to here. And if general rule in price action, if it works once, very similar pattern, it's most likely going to work twice. So beautiful bearish reversal bar, two key entry points, high probability setup. It is a form of a second entry, even though technically it is a third entry short, but you cannot really enter below this bar. And you guys can see how nicely we traded up lower. And here was the good trade that unfortunately wasn't takeable for us, because the bar is way too big and it didn't really go much lower. Even though you guys can see the stem here, this is not really what happened. What happened live is we traded up lower, and at the very end of the bar we started trading up higher and ended up like this. So you couldn't even sneak in with the limit order. You just had to let this go. But important to realize how important the close of the day, the previous day is, and just try to use this useful indicator to help you find the key level. And prices just started to rally up higher. So you have to draw the short-term trend line to keep you on the right side of the market. You have a break, new high, unfortunately only first entry long and far away from EMA, so you cannot take this. And you have a new high. Perfect price action. We played out to the T. So this uptrend is over and we should be expecting correction or possibly a reversal. you're working up lower, and once again, your instinct, what you should do first, draw the short-term trend lines. Just draw them as much as you can, because it will really force you to follow the rules if you draw them, because you can just try to eyeball them, and if you're a little bit new, it will come back to bite you, because you really need to draw them so you really know what to do. And take a look how you have a slightly small little overshoot right here, and it led to a break. The same thing happened right here. You have look how nicely it fits prices neatly. Overshoot, and instantly it leads to the break. So these overshoots, they work. The rules of overshoots are 95% legit. Overshoots will most likely lead to break over trend line or even straight up reversal. So we have a break, attempt to make a new low, potential support forming here. You're working up higher. You have a little bit of break. It was a little bit tempting to go long here if we had a little bit better bar, because we have a double bottom right here and the way we pushed above EMA. But right now you're at the middle of trading range, and this signal bar is too bearish to my liking. So what I liked better is once we made this double top, and I only took 2 trades today, this one and this one. This was the second trade for me. We have a trend line working up higher. You have a break and a new high, and you have a nice double top and a nice bearish bar. And you're quite a bit away from EMA, so you're most likely going to pull back. So what you can do, you can once again draw the little bit short-term trend line, or something like this. It doesn't have to be perfect. Oops, doesn't have to be perfect. You have a break, new low, and you kind of stopped in the middle of trading range, and you came back and you have another setup. And now this is a third confirmation of this resistance. So I think, and once again, you get a nice bearish reversal bar. Really, the signal bars today were on point, while we're trying to follow the rules. And so you're working up lower, you have an overshoot, which leads to a break. And this is a lower high of this high. And we're coming off the lows, but and look how little nuances price action is giving you. Because if this is a legit trading range, this is your first thought when you're looking at this live like this. If this is a valid trading range, you're supposed to go to this support. You're supposed to go to this support, but twice we bounce fairly in the middle or the lower third. So this was, telling me that there might be some bulls in the market, ready to buy. So this lower high, I don't really feel like taking this, even though hindsight, it obviously looks good. But once you cannot even make it to the bottom right here, it looks like we may actually break this resistance and keep working up higher. And it didn't happen. You have a break, new low. And here was the potential first loser that you could have gotten trapped here, is this potential bounce off the support, because you're not quite close to the support. But it is, some trader will definitely try to take it or try to sneak in with the limit order. So this would be a potential loser. There's really nothing you can do about this. But once you get this failed break lower below the resistance, below the support, and most breakouts will fail, you want to definitely now go long, because all these people that went short a little bit too early, we're not close to the support yet. But you cannot really blame them. This is a good signal bar, but they went long a little bit too early, and they all will force to get out of their trades, and everybody re-entered right here, and the market just continued working up higher. So perfect key level again, held the prices. You have a first entry short, pull back, second entry short, and we are looking for failed second entry short in this instance, because we're coming off the support and we are expecting for prices to go high like this. But we're below EMA here, and you're starting to get a little bit of a congestion right here. So what is better is to draw the trend line, and you pushed above the EMA. So buyers are confirming that they are in the market, and you have a nice reversal bar. Even though this is a one tick bearish body, at the very close of the bar, we traded up higher. And this is how important it is to focus on the close of the bars, not to trade when the bar is in the middle, because this bar looked very bearish, like we're gonna go lower. And at the very end of the bar, the key entry points, EMA and trend line held, and it was the nice trade coming off the resistance, and market just then continued to go into this congestion. As you guys can see, this little consolidation, which you find the support, you find the resistance, support the resistance, and you fade the breakout. But to wrap it up, very easy to read the price action today, but trying to follow and trying to use this indicator, it will help you find the key levels. And because some traders, you know, when I was starting out, I was wondering why the prices all of a sudden bounce off of here. What was the reason that prices made it all down here and suddenly bounce? What was the reason? Well, this can help you identify the reason. So I hope the video was helpful, and I'm going to see you guys in the next one. Take care, everybody.